What's up, guys? Today is June 3rd. It's a Thursday, and typically I try to make a trade recap video for you guys, just to go over my thought process, the trades I took, what I saw for the day. But today I'm going to be making a little bit of a different video. I'm going to be making a video strictly for psychology, some really important psychological tips that I have, which started to, turn the tide in my trading. So I'm not really going to be going over the trades. I was down today, which is fine. I'm still up nicely for the week. It happens. But the first tip I want to go over is do not, under any circumstances, try to create imaginary setups in your head. And what do I mean by this? The purpose of taking high quality setups is for everything to align up perfectly. So what do I mean by this? Let's go over to NVIDIA today. This is a setup where everything lines up perfectly. ES just broke high a day. NQ had this nice bullish candle. NVIDIA had a clean 5-minute rally-based rally over this flag and all-time high with volume and momentum backed up behind it. So A+ setups or high-quality setups occur when every single factor aligns up together. If not all of the factors align up and there's a caution factor, then it doesn't become a high-quality setup and immediately you should avoid. So if just because you think that a stock is going to run higher, make sure to formulate a plan and make sure that you're taking a clean setup. For example, I had forced trades. Personally, I forced trades in this area when there was no clean setup. There was no clean 5-minute rally-based rally. There was no clean 15-minute rally-based rally. We had lower volume. So what I'm doing here is I'm creating imaginary setups in my head, just because I think we're going to break all-time highs on NVIDIA. But that clearly isn't the case. So that's my first psychological tip. Do not create imaginary setups in your head just because you think the stock is going to run higher. My second psychological tip is kind of the opposite of it. It's kind of the other case of it. If a setup runs and it works out in your favor and the analysis is correct, but not everything aligned up, you'll have to avoid it. So in this case, I tried forcing imaginary setups in my head because I thought we'd break all-time highs. But this is a case right here. Let me just highlight it. Where we broke high a day above all-time highs. We had a nice move up, but there was no clear period of consolidation. So in this case, the setup worked out very perfectly. Your analysis may have been correct, but there was no real period of consolidation to get in long before this high day break. So in this case, the setup worked out perfectly, your analysis worked out perfectly, but there were a couple of factors which prevented you from taking this trade. So in this case, you also have to avoid even if it works out perfectly. So those are my first two psychological tips. If the setup works up nicely, but you don't have the consolidation or the confirmation you need, let it go. And the second one is do not create imaginary setups in your head just because you think the stock is going to run higher. My third psychological tip is what was it? I had this written down somewhere. Give me a second. Okay, yeah. Dylan kind of mentioned it, but do not get married to a stock. This is the problem that I had today. I'm going to be completely transparent with everybody. Let me go to a 5-minute time frame, 5-day. So this was a Friday. I don't know the exact date, but I made $420, including commissions on this move up. Now you go over to Tuesday, which is this day. I took 2 setups on NVIDIA. I made $643 in US dollars in commissions. So in the last 2 days, I made over $1,000 on NVIDIA. So I felt invincible. I felt that NVIDIA had the possibility to do what it did in the past 2 days. And hence, I started taking setups which made no sense just because I thought NVIDIA would follow what it did in the last 2 days. And, I gave a lot of it back. So that is a third thing. Do not get married to a stock. Only take high probability setups. In this case, there was a clean setup on Nvidia, which I was able to capitalize. However, I took two unnecessary losing trades here, which unfortunately outweighed my winner on Nvidia. Uh, my fourth tip, and this is probably one of the most important tips in my opinion, is please look at the bigger picture. And I really mean this. Please look at the bigger picture, because looking at the bigger picture it's gonna change your trading. It's gonna turn the tide for your trading. What do I mean by this? Uh, so let me pull up ES and NQ. So on a higher time frame, let's see where we're trending in this market. I'm not even gonna draw this like perfectly, but I'm just gonna draw a line. What is this? What type of market are we in since the last couple of? Let me go to a daily place here. What type of setup? What type of trend are we in for the last couple of months? We're in a clear uptrend. So why would you consider playing puts in such a strong market? I know we are choppy. I know we've been choppy for the last month or last 2 months, but we are still clearly in an uptrend. So that there's really no reason to play puts. Let me give you an example. So ES had this support level right here. As soon as we breached below it, buyers bought us right back up. So on a higher time frame, there's no reason to play puts, because every time the market bids lower, there's going to be buyers to bid us right back up. Each dip is getting bought up in this market, so there is no reason to play puts. Puts in this market become a lower probability. Uh, Okay, so that, and then I'm gonna go over a couple of equities as well. Same thing, you want to play the equities with the most strength. Look at the bigger picture essentially. So look at Apple. So Apple is, clearly making, it was making this wedge pattern on a longer time frame, and then it broke out of it to the downside. So why would I even consider playing calls uh, on a stock like Apple right now? I don't care if we have clear relative strength, clear 5 minute rally based rally over a psychological level or something like that. Just looking at the bigger picture, I'm not willing to play Apple, because every single rally gets sold into. We have a rally, we get sold into. Another rally at 125, we get sold into. And now we're trading at 123. When Apple starts to show clear momentum to the upside, then trust me, I'm going to be the first one playing Apple with heavy size. But for now, I'm leaving Apple alone, because the bigger picture is telling me that there's no clear setup on it. Counterintuitive to that, let's look at a setup like Nvidia. Nvidia each day is making clear all-time highs, so it has clear strength to the upside. So in this case, with the fact that ES and NQ are also to the upside on a higher time frame, I'm looking at long opportunities on Nvidia because it's in a clear uptrend. It's showing clear strength. Facebook, broke out to the downside. Let's look at a couple of more. Same thing with Boeing. For Boeing, every single rally or every single dip is getting bought. We dip down, we bid up, we gap up the next day. It looks like we're bearish, but then we gap up. So Boeing is in a clear uptrend. So I'm looking at long opportunities or some type of long setup to play to the long side on Boeing. So play setups with clear direction. I'm not touching a stock like Apple until it can show me clear direction. Same thing with Amazon. No real clear direction. When we break this 3300, my bad, along with this flag pattern, then trust me, I'm probably going to be one of the first buyers here. Same thing with Google as well. Google is choppy for the moment, but the second it breaks this resistance here and starts bidding around 2400, I'm going to be the first one to long the market up here. But for the time being, when a stock is choppy or showing no clear direction, avoid it for now. And trust me, you're going to thank me in the long run, because I was one of those traders, who just looked at the 5 and 15 minute time frame and would formulate plans. And then my win rate was somewhere around 40 to 50%. But just by looking at the bigger picture, I was able to get that win rate up like 10 or 15%. Okay, and so those are what, four tips? And my fifth and final tip goes over revenge trading. And I'm going to be going over a little bit of a different perspective on revenge trading. So don't get me wrong. You know, everybody revenge trades. I revenge traded a couple of days ago. Um, I'm human. At the core, I'm human, so I'm gonna make emotional mistakes. I'm trying to clean those up, but do not revenge trade at any cost. And here's why. So over the last few months, I've been pretty consistent in the way I've been trading, and I know the way I trade will make me money in the long run. So I just want you to process that for a second. I know the way I trade will consistently make me money in the long run. I don't care if I lose money for a day. I don't care if I lose money for a week. I know that if I stick to my plan, I will consistently be able to walk out of the market every single month with a nice income if I stick to my plan. So say I'm down 400 or $500, you know, I don't want to revenge trade and try to get that $400 to maybe break even or positive on the day, because I know in that case I would be taking lower quality setups. And the second I deviate from taking high probability setups, I'm not guaranteed to make a consistent return in the market every month. So if you are down on a day, you have to understand that it is okay, because you're not going to win every single time. And if you just walk away and continue to take high probability setups, you will. And let me repeat this again. If you are down money for a day and you lose money, then it is best to walk away, because I can guarantee you with 100% certainty that if you just stick to taking high probability setups, despite losing money for a day, you will become consistent in the long run. And to me, consistency is a goal. The goal isn't to make money. The goal is to become consistent in the market. And when I become consistent, then the money will easily follow. So I, yeah. Those are my five, you know, psychological tips. Um, and I really hope that you guys watch this video till the end, because these couple of tips are what have turned my trading almost 180, and I'm starting to find consistency in the markets now. If you guys want me to go over an in-depth review of the trades I took today, then just, you know, leave a comment, and I will probably do that maybe later on in the week. But for now, I just wanted to make the psychological video, and I hope you guys can learn something from this.